Hey, all right. Good morning, everybody. Give me just a moment to get the Zoom up and running. Good morning, everybody. I don't know, man. I'm off. It feels like Monday, and I know it's not. It just feels like it. Well, good morning, everybody. It's Hump Day. We had a significant little bit of news come out before the briefing. You see the bonds and the dollar kind of shook a leg, and when they did, we got a little bit of a reaction out of the market. The bonds and the VIX were very correlated in that. There's a little bit of perspective that comes when these two are doing the same thing at the same time, as opposed to when these two are doing the same thing at the same time. It's worth checking out. Just give you that little tidbit and let you, go find your correlation there on your own. All right, so as usual, we want to start with the morning briefing at Market Watch. Kind of come into the calendar. We have a 10-year note today at 1 o'clock. This is a big one. Keep your eye on the clock today, 1 o'clock. You're very, very likely to see a change in sentiment, 100% reversal off of whatever it was that we had already been doing all day. So this is a big one. Definitely keep your eye on that 10-year note. 10 o'clock, 10:30, and 1 o'clock. The JOLTS number, I mean, these are going to be important to keep your eye on today, right? The announcement out of Canada, I mean, I don't want to say that it doesn't have the potential to impact us. Since it's tied into JOLTS anyways, we'll just say, that there's a chance at 10 o'clock and leave it at that. We may see some fireworks out of Canada today. At least from what I was reading over on Bloomberg. What do I know? Bloomberg knows. All right, so that's your calendar for today. If you came over here and your calendar looked like this and you have all this junk, just hit the show all, turn everything off, and then hit Econo Day just to turn on the thing you need to turn on. By the way, the home screen is one of the parts of Thinkorswim that is the most unused and yet has absolutely amazing features that can make your life easier. If you've never gone over to the home screen, you're really missing out, including a watch list that scrolls like a marquee and can be detached so that you can set it at the top of your web pages. All kinds of things over here. I use this constantly, and most people say, home screen? What are you talking about? Thinkorswim has a home screen? What? Make your life easier. All right, so we're basically on a daily chart. I've got it set to 12 hours so we can see the higher time frame and see intraday candles. You can see that we're very close to the next pivot point, basically forming a cup. Will there be a handle? Boom, boom, boom. I don't know, right? Who knows? Get out the crystal ball and, shake the magic 8-ball, however you want to get there. We tag that 50 on the jerk back. No, I'm not talking about my cousin. I mean the market, when it jerked back, bounced that 50. But it made it back above the 20, right? So far, so good. There's no more liquidity at 47.06, by the way, right? We took care of that. But the size of these wicks, you would be, it would benefit you if you just looked at this entire area as a zone of liquidity. We are starting to tighten up here. Decisions will be made. We cannot stay in this range for the rest of the day. We're only up 0.25%, plenty of room to run. I was slightly shocked by the fact that we're still inside or near the top of the volume profile on a 30-minute, and we are inside it on a 1 hour. The amount of volume that passed here yesterday almost gave us a new point of control. That's how much volume we had there. And yet we had very little time spent there. If you were to look at like time versus volume and kind of recognize, how much volume passed at a particular level versus how much time we spent at that level. So for this morning, if we do manage to get back above 47.06, we will challenge that next pivot point. We have the weekly expected move to the upside. And one of the questions we want to be able to answer is it within reach? Can we get to that? Well, from our current location, if we just add 1%, that gets us to the top of the weekly expected move. And that's our ADR right now. We have an ADR of 1.41. This would be a 1.31. So it would be within the common normal average 20-day movement of the ES. On a day-to-day basis in the last 20 days, it's been able to make a 1.4% average move, which means we could very, very easily see the top of the weekly expected move. And it's only Wednesday. That wouldn't sound so bad, except how wide or how big the weekly expected move was this week. It was ginormous, right? That's a technical term. Like gundo, huge, big, mas. That's the size of the weekly expected move this week. I mean, are you kidding? Look, take it and put it back here. Like 4 times the size of a regular, normal weekly expected move. And we're about to get to the edge of it today. This is a 30-minute volume profile. And this is a 30-minute time profile. Volume by time and volume by price. Look at how much volume we have right here. That's a lot of volume, but we really didn't spend much time there compared to down here where we spent a lot more time, right? You can see it. We spent a lot of time down here, and we can see how much time we spent there. We didn't spend as much time here, and yet we have a lot of volume here. For the day, if we do manage to get above our own intraday Globex, we'll deal with the pivot and then aim for the weekly expected move. 47.11 is a COG, center of gravity. Be aware of where it is. And look at that. It's exactly what we hit before we rejected. How did I know that? If the market does not like the numbers that come out in the jolts, we're very likely to go the other direction, in which case we will retest the Globex lows. We will reshape yesterday's lows, and then we'll deal with yesterday's open. Yesterday's open, or opens in general, they're worth marking every single day. As soon as the market opens, I mark a line there. It's a pivotal institutional pivot point. Well, that's a lot of P's. Looking at the trend here, you could almost get a little concerned about how sideways we are. Almost. When you have a market that's in a trend and then it just starts to run sideways, and it starts going sideways for too long and builds a bit of a topping pattern. Yeah, but it's Globex. The initial balance from last night, 4 candles on a 15-minute chart, 1 hour, starts at 6, ends at 7. There's no argument about this. I had people tell me that initial balance is 9:30 to 10:30, whatever. You go to a footprint chart and tell it you want to see initial balance. You know where that footprint chart is going to print that initial balance? Between 6 and 7 at night, automatically by default. You would have to go in and change the settings and give it a new location if you wanted it to be between 9:30 and 10:30. There is the concept that suggests if we have a very narrow initial balance, that we have the potential to make some significant moves on the day because the work has not been done yet, right? Joe gets the call from his boss. The boss says, hey, get me X amount of contracts done. He's got to get that done. If he makes all of his work done and runs this thing, then it's very likely to have a very wide initial balance, and he has no reason to come back into the intraday. He's done. He accomplished his task for the day. He will go do a different task. But if it's very narrow, then it suggests that he did not get his work done yet and that there is still things that needs to be bought or sold. That he is likely to come in and participate in the intraday. Who's he? Bob, of course. All right, for the NASDAQ. We'll just steal this line from down here. Pivotal level. Why is it pivotal? We'll come out to the higher time frame. You can see that. You know, at least take the opportunity to come out and look at the higher time frame, even as a day trader. You never know what you may see out there. I will be streaming in the large caps this morning. And we're actually looking to change up the streaming schedule by the new year, which ought to be pretty cool. With Tim retiring and coming in, I will be doing futures Mondays and Fridays in the morning, and then be doing maybe some afternoon streams like we used to do back in the day, right? When we would go in and I'd fire up the stream in the afternoon, and we would put on trades and build trades and options and analyze the living hell out of them and discuss them endlessly and then trade them live. Yeah. So that's coming back in the new year. And I heard whispers that the new Discord is almost ready to go, guys. This is going to be so cool. A next level Discord, next level library, just completely and fully formed right inside of the Discord. Same with courses. It's not open yet, so don't ask. But it's almost ready to go. Almost. Okay, so we got the level marked on the NASDAQ. You can see we are underneath that 50. We got a little bit of weakness, got a topping pattern that is beginning to fail. If you use the R tool, right, it's the linear regression drawing tool, and just start at the previous peak, move your mouse to the right. It shows you very clearly where the direction of these candles are going, right? And look at the sine wave. It's a pretty tight wave. Low to high, high to low, low to high, high to low, but it's getting a little bit bigger, right? Each swing in the sine wave, that's S-I-N-E, sine wave. We're getting more exaggerated candles. We've got 15 minutes before, you know, the other markets start to open, the dollar first and then the bonds. They didn't wait for us, right? The dollar and the bonds, they already started beating up the marketplace. So a move to the upside in the NASDAQ. We've got an ADR right now in the NASDAQ of 1.9. So the NASDAQ could make a 2% move today and everybody would just shrug. Yeah, it's nothing, right? We're barely up on the day, 0.25%. Now, granted, 12 hours have already gone by. So, you know, making a 2% move at this point, it would be significant. It would be lit up. It would not be any kind of subtlety or surprise, right? We do have the 50 underneath this on the 30-minute. It's going to be the line in the sand looking at this for causation, right? Kind of come back here and realize when the market gets below that 50, things start to change a little bit. So, we're going to be keeping an eye on this, see if it's going to bounce there or not. There's nothing special or magical about a 30-minute 50 SMA, by the way. It could have been a 1 hour, 2 hour, 5 hour, 78 minutes. Doesn't matter. I use that 50 everywhere. Everywhere. Even on a 250 tick chart, I've got a 50 period moving average. And you know what? It is always significant when we interact with that 50 on any time frame, anywhere. So if we bounce and hold and break through this level, we'll be looking for a 2% move. A 2% move from our current location would put us right about 16.7. Nice round number. A move to the downside, should we breach that 50, we will deal with yesterday's intraday high. Well, that was the wrong spot. Beyond that, we'll deal with yesterday's open. That would be a 1.5% move to get us down to yesterday's open. Add the 25 that we already had, or subtract, I should say. That'd be a 1.25% move from our current location. We'd be down 1.25%. That's not too bad. It's likely to stop there because it ties right into that cloud. That cloud is a moving average from the daily time frame. It's the 5 and the 10. You can see right now that the 5 is still underneath the 10, but it's looking to cross back up again. We're looking for a 5-10 cross. All right, whatever shook us up a little bit was some news, I believe. I'd already read it on Bloomberg, but it seems that there is a little bit more confirmation about the strength of this variant and or the lack of strength, I guess, that it's not as bad as they all had originally expected it to be. So that's a good deal. We're going to be looking for the VIX, which is now back in contango, to get below $20 today. We really want to see this thing fade out. We want to see the skew and the inversion in the put call ratio really start to mellow out. Try to get that schmirk down a little bit. It's the volatility schmirk. We don't want to see outsized moves in either one of these products, the dollar or the bonds. It is important to recognize every time they do this, it rocks our market. We try to use a reasonable size stop so that we're trading efficiently, and a move like that randomly out of the blue can just stop you out, and so it doesn't even necessarily lean into, well, if the bonds are going up, the ES is going down, maybe I'll get a trade. It's the idea that if these two keep spiking and randomly taking off, then we're going to keep randomly getting kicked out of trades, or we're going to have to widen our stops. Now, one thing that I like to do is decide what kind of trading day we're going to have before the bell so that I don't end up trading in junk that looks like this. This is tradable. Don't get me wrong. I'm not saying that I can't trade it. I'm merely stating that I don't want to. My strategy works better when we have a clear and consistent market direction, when the message is clear, right? One-time framing, trend, something other than just chop and madness and chaos. So if we stay in this very tightly wound range here, I'm very likely not going to come in and get a trade in the regular trading session. If we were to leave this range to the upside, it would entice me to come in and trade. And or if we go to the downside, there's enough room here for an opportunity. Wow, Tyler, I don't know where you're at, bud, but it's loud there. Get some earplugs, buddy. I worked in the oil field for 20 years. We talk about loud. Be on a drilling rig when that Kelly is rocking. So let's see. Go to the next spot. Trading view, S&P 500, bringing it down to pre-market change percent. All this gray is a little misleading. So we want to change the color scheme a little bit. And we want to filter it because 500 names really isn't what we're looking for. We want 100 names. Due to the shift in market cap, 100 has been really hard to hit. It's been like either 96 or 116. I'm going to go with 116. I think you want to use the filter and then change the color. So there you have it. A lot of green, a little bit of red. Notice the red is the FANG names. Netflix, Tesla, NVIDIA. Yeah. So it may not be like too big of a surprise, right? But keep your eye on these. They have the potential to really rock this market out in a good way, right? And as I was saying yesterday, we're not really outside of the boundaries of that measurement of how far away from the 10 are we, right? When we use that measurement, kind of asking, has the market gone too far, too fast? And we ask, well, how far away from the 10-period daily and weekly moving average are we? We're not, quote, too far away yet. We have plenty of upside. So the bobbing heads on TV, you know, the internet gurus trying to scare you about all the reasons that you shouldn't be long, and forget that. Trade what you have on the chart and trade what the measurements tell you. And the measurements tell you we still have plenty of room to the upside. We have not gone too far too fast. SPY at 500 by the end of the year. SPX, you know, at 5,000 at the end of the year. Those are JP Morgan numbers from early in the year, from January and February of last year, or of, you know, the start of this year. S&P 100, looking at things that have moved around in the pre-market. Since everything is green, I really want to look at the other direction. What isn't green? Anything that may stand out? The FANG names, we already caught that. What about, you know, individual sectors? How's the EV market this morning? The chip sectors, you know, pot stocks, technology. Just go down the list. What is in here that we may want to keep an eye on? AIG gets my attention. I'd want to follow up more with finance, MasterCard. You know, ketchup, poor thing, just getting whacked. Everybody likes ketchup. Pepsi, flat. Capital One, also just basically flat. So we need these finance to come in. We need these guys. We need finance because finance brings energy, and we need technology, right? And with fintech, those two kind of go together either way. If we're going to have one of those really great days, we need one of the two powerful sectors to participate, tech or finance. We'll set this one to the NASDAQ 100. Pre-market change. We don't need a filter. We just want to adjust the color scheme a little bit. Again, the negatives really stand out. Netflix, Adobe, NVIDIA, Tesla, Honeywell, PDD. But for the most part, we're either flat, like with Amazon, or, you know, we're up reasonably well this morning, like Facebook and Google and Apple. And I know how sad that just sounds as I said it. These are up more than 0.5% this morning. That's a really good day. If that's all that they made, that would be considered a good day. And yet, well, they're up a fraction. They're up a little bit. They're up 0.5%. 0.5% used to be good. Now we look at 0.5%. We say, that's all you gave me is 0.5%? Come on. You got to give me at least a 5% move. Names in the NASDAQ that are up at least 0.5%. Not very many. You could consider that we're going to be opening relatively flat this morning. 20 names in the S&P are up 0.5%. I see a lot of financial names in here. And then, of course, you know, Disney and McDonald's, Ford, Nike, General Motors. You want to keep your eye on the sectors, right? It's really what stands out. It's not the individual name per se. Walgreens better calm the heck down. I got an iron condor in there. Go back to sleep, Walgreens. So it's not the individual names we're looking for, right? It's more of what do those names represent? Can we lean into their sector or industry or sub-industry for some trade ideas? This is a watch list of companies that have weekly options. It is a very long list because there are 600 products that have weekly options. What I try to do is eliminate the ones that are double and triple leveraged, and a lot of the ETFs. I go ahead and I get those out as well. And you can see on the negative side, we've got a fairly large amount of names that are either flat or negative. Good big name, CrowdStrike, Netflix. These are not your, ho hum tiny little markets. Tesla and DocuSign. So, follow up with the names that are negative and see if their sector is looking for that reversal on the day. I see some chip names in there, finance, with the bonds and the dollar moving around and the additional auctions today. I'm going to be watching finance for an opportunity because if they're down, I'll be looking for the reversal rather than trying to find something that is already up, a significant amount and then trying to trade that, right? So as you can see, airlines are up this morning. All the sectors are up this morning. Now, emerging markets is basically flat, and this is the risk on tool that I use to kind of gauge how bullish are we. We've already quantified how many names are up, how many names are down, but emerging markets kind of is the linchpin to the whole thing, and it finalizes the statement. We're not overly bullish this morning. We're not negative. We're not positive. The market is literally just waiting for the next bit of information. When you don't see something out there, like literally right now, where we're all just kind of on pause, if you don't see something and you think maybe you're not seeing it because you're new, trust your instincts and maybe realize you're not seeing it because there's nothing to see yet. Cloud computing and IGV, be keeping our eye on those. But for the most part today, for me, it's going to be finance, maybe a little bit of energy. Chip names, it's a mixed bag. Some good, some bad. A lot of these chip names are now tied into crypto. So, that needs to be taken into consideration. Speaking of crypto, remember that my watch list is not necessarily crypto as much as it is a blockchain. Electric vehicles. I thought we had a setup on a red to green in the electric vehicles. Now this thing doesn't want to load, so maybe we'll have to go over to Thinkorswim. There it goes. Yeah, no, not a red to green. I thought there was some red to greens over there. Maybe it was in NIO. Yeah, so okay, so NIO has the potential for a red to green setup this morning. This bear pennant isn't a really big pennant per se, see if we can do this with the drawing tool just to, yeah. What we want to see is a failed bear pennant, right? It's like a failed flag. So we want it to rally up higher than yesterday's high. The fact that we are up above yesterday's close would normally be like one of the criteria, but the size of yesterday's candle, and we closed, not in the middle, but pretty close to the middle, means that the pre-market rally here really doesn't have any significance to it yet. So now we're going to need to see it rally all the way up to the outside of that candle. A failed bear pennant has the potential to reciprocate back up to the previous levels. That could get us up to 38. So, we want the combination of red to green and failed flag or failed pennant. It's not just this one name, right? It's a lot of the EV markets out there. Maybe one of them, other than NIO, would offer a better perspective. All right, marijuana companies. It's kind of a mixed bag. A little bit of positive, a little bit of negative. My list has not just recreational or medicinal, also has marijuana real estate, which was an odd turn. But a couple of good names and some opportunities from the side that is flat, and even the ones that are down slightly. I'd be looking at those more than the ones that are up significantly. And as you can see, financials, every name in the watch list is green. Okay, CB is flat. Now, the ones, just because they're green and they're up, a tenth of a percent, that doesn't really inspire much. All right, so kind of keep your eye on those financials. That's what I got for you guys. I will see you all at the open in the large caps room.